are you folks doing? Thanks for hanging out here with me. It's another fine day. It's a Friday, 12/27, 2024. I'm Big Cheds, probably most well known from Twitter, of course, at Big Cheds. This is part of the quick market update series on YouTube at Cheds Trading. You're going to want to make sure you've watched the entire Masterclass TA tutorial playlist. I teach professional technical analysis, Japanese candlestick theory, and classical charting. I am CMT level 1 trained. I have published 3 books. The 4th book is on its way. Most of that stuff is free in one way or another throughout my channels. And of course, I'm a founding analyst at Bitcoin Live, where I produce a twice a week full market update, even on Christmas. Doesn't matter. I'm sick. I'm on vacation. Check out some of that stuff. There are free reports available. So, folks, just say hi. Leave me a comment in the chat. Let me know how you're doing. Ask a question. Ask a trading question, and we can create some value here. It's a subscriber-only chat. So I would encourage you to hit subscribe, notifications, and all that stuff. So, but more importantly, thanks for being here, folks. So we'll talk about a little bit of Bitcoin. And we'll see if I have a couple tweets that I'm ready to discuss, and we'll go from there. So yesterday I talked a lot about the concept of focusing on the daily MA50, right, versus focusing on the level that the price is very clearly marking for us. And I've seen several comments. It's over. It's bearish. Oh, we're going to bear cross here, EMA 834. We're breaking down because we're losing the 50. I really don't care about any of that, as long as the bulls continue to step in and defend at this level, the most important level on the chart right now. There's no debate. There should be no debate. If anybody's read a textbook, they're looking at this price zone. They're understanding. You're giving bulls full benefit of the doubt until it loses, until it loses this level. It's an unbelievably strong weekly trend. Price above a rising EMA 8. Well above the prior range high. Beautiful rising daily MA 200, simple, meaning equally weighted MA 200. And so that's really, I riffed on this a lot yesterday, and I was a little bit animated. So you can I would just go back and watch the last video to get a little bit more of that. But really, that's just so incredibly important right now. You could drop to 4 hour, you could drop to 1 hour. Sure, the 4 hours under the 200, unable to hold above it, fine, but really none of that matters. As long as bulls hold here, we're looking at buying in a lower Bollinger, essentially lower Bollinger dip, or at the lower Bollinger in an uptrend at well-established range lows. So I don't know what much more you really would want as a bull, right? You know, we've consolidated. We essentially entered this range back, a little bit more than a month ago. We've been, chopping sideways, pushed higher, and chopping sideways for a month, and that's really good. So after breaking out over 91, 92K, we've held for more than a month. That's incredibly bullish. We're consolidating nicely near the peak of the range. It's just very nice, healthy consolidation right now. That being said, should the price lose this zone, I'm going to reassess. You're going to see me reassessing here on Bitcoin Live, on Twitter, and I'm going to start to look lower to see where the next level would be, but I'm not even doing that. I don't need to do that. I'm not going to do that yet. I'm going to trade level to level. Should the price get a little bit lower, I'll take another. I'm already long from well below, but I would take another long trade, a short-term trade here from that price level, right? What do we see developing here, right? 98.5 has been the next overhead level, but price has chopped through that, and if we get a little bit more local, which means the most recent price action, let me drop back here to the really to the 4 hour. I think you can view now really 99.5 as your overhead level. So you have a level that you can take to go long, either on a retest of range lows or on a break of overhead resistance as defined by the price in this consolidation channel in this 4H. A 4 hour candle series. And so you've got that. So you've marked now mid channel, you've got the bottom of the range, and you've got some overhead above that level if the price is able to break there. But we don't really need to talk about that too much yet, right? We really should just stay laser focused on this really important level. What other tweet do I have here? All right, let's talk about this. So I'm noting bullish divergence with the RSI on daily, right? As the OBV strength confirms the trend. So how do we make sense of this? And I think a lot of people use divergence the wrong way. And I go into this in great detail in my Masterclass tutorial series. I will have another one at some point. And I'll get to the chat in a minute. I'll have another Masterclass tutorial at some point in the coming months. I'm planning for it. It takes some time. I can't just whip it together. But what we're seeing here, so I talked a minute earlier about how the price is consolidating and holding the gains. It's holding near the peak of the range. And while that's happening, right, we have the RSI cooling off. And what that does is it creates a divergence, right? The RSI is a bounded oscillator. That means there's a fixed limit above and below, as opposed to the on-balance volume, which is an index. It doesn't have a fixed limit and can keep going up or keep going down, which is why you tend to get in a lot of trouble trying to use RSI for regular divergence or reversal divergence, right? RSI is best used for hidden divergence, where the oscillator is making lower lows. RSI is cooling off while the price is holding gains. That's suggestive of bullish continuation. So we have, now you don't have to get too exact when you're drawing the OBV. Is it this, is it that? Do I need to draw this low? You're basically just, the OBV is confirming the trend, right? OBV strength confirms the trend. You've got that. Then you have the lower lows. You have the lower lows in the RSI versus the higher lows in the price, right? So the price is holding gains while the RSI is cooling off. And you don't have to get too exact with how you draw the line. It's the idea that the price has held the gains while the RSI is cooling off. That's a hidden bullish divergence while the OBV confirms the trend. And you want to keep an eye on that. So again, RSI as a bounded oscillator is best used for hidden or continuation divergence, where you might have higher highs in the RSI, okay, versus lower highs in the price. That's a hidden bearish divergence. That's a bearish continuation. It's a hidden divergence. So a lot of people misuse divergence. It's a tricky thing, but again, if what I just said sounds really complicated, just watch the Masterclass tutorial playlist. I mean, I made it for you. And I go into great detail on that, as well as how to use volume, how to set up your indicators, differences between moving averages, and all that good stuff. So let's start right there. Let me just say hi to the chat, and we'll see if we have any questions. Again, fire off. Maybe a chart request or two. I didn't do too many yesterday, so maybe do a couple of those. So let's go on. Let's see what's up in the chat. What's up, Maddie? Chocolate, always good to see you. Bilal, what's up, man? Good to see you, Bilal. David and Mohammed and Rian and Dreamer and Crusher. I love to see, and Peter, I love to see all these names. Toy and Crypto, good to see you. Keep hanging in there, folks. And by the way, Toy and Crypto says, can you hear anything? I assume you folks can hear me. Otherwise, someone else would have said no audio. So how's everybody doing? Let's see here, some questions. So Arjit says head and shoulders on daily. Why do I need to add a name to this? Okay. This is a great question. Why do I need to add a name? Arjit, calling this a head and shoulders, Arjit, what does that do for me, right? Even if you say, oh, it's head and shoulders, you still have to define your trigger level, which would be 92K. We're already watching that. So already calling it head and shoulders hasn't done anything for us. And then you're going to have to define a invalidation level, which is the right shoulder, which I just looked at anyway. And we already defined that based on 4-hour structure. So we don't need to spend time labeling patterns. People spend all sorts of time labeling patterns. If you tell yourself this is a head and shoulders, first of all, it wouldn't be a head and shoulders until it completes. It would have to break the next baseline. So, why do we need to label this? Why do we need to give it a name? It doesn't give us any more information. It doesn't push us any further towards where we need to be. Jared says no chart request. Just want to tell you that you're appreciated. Oh, thank you, Jared. So you see my point, and I've riffed in this before. Too much time labeling patterns. It doesn't do anything. What's the practical benefit of calling this a head and shoulders? If you do that, you still have to define your neck base. Well, we're already defined this level. It's very clear we're watching that. We already are pretty clear that it's risk off below and you're buying the dip here, as in also most reversal patterns fail. So even if it's head and shoulders, you say, okay, cool. I'm looking to buy when the right shoulder invalidates. I'm looking to buy at the neck baseline. And then I know where my idea fails, just below the neck baseline. So sure, head and shoulders, you can call it whatever you want, but it doesn't actually give you anything more than you can just very clearly see. Very simple, straight up classical charting, neck baseline, local overhead level for a long trigger. And I don't have to put a label or name on this. Does that make sense, Arjit? Hopefully that makes sense. So Mauricio, thanks for live. Thanks, Mauricio. Appreciate you, brother. Folks, hit like and subscribe. So that's my thing, right? Names, labels. When you give yourself a name, you're going to convince yourself that something should happen or is about to happen. Don't do that. Just look at key levels. Avoid labeling with names. Patterns are fun, but they don't really give you anything, right? Because it's all more so about price levels to increase risk, to decrease risk, where the trend would strengthen, and where the trend would weaken. This is all very clear. All right, let's see. Someone had asked me about, I'm looking at some of the earlier chat messages, people who commented before I even started, and they were here earlier. I appreciate that dedication. So, okay, Wise says, let's take a look at XRP. So let's do that. Let's look at the hashtags, the standard. XRP still looks pretty good. You can call it a descending triangle if you want. Could be a reversal. Usually it's a bearish continuation. But again, labeling it doesn't give you anything. You have very clearly marked price lows where bulls have stepped in. A couple nice long lower shadow featured candles. That's the key level you want to see to manage your risk, to mark your risk. And it's got some pretty decent consolidation. I mean, Bollingers are tight, which means we probably have a volatile move coming soon. But this is still quite bullish consolidation. I like XRP, and I would favor XRP to continue higher. Probably 65% likely, in my view, to continue higher. Someone asked me about what song it was. It's Church of Eight Wheels by Otis McDonald. It's one of those, like, the free songs that they give to creators. And we'll do maybe a couple more. Yeah, Maddie says, can you look at DOT? Yeah, I think about cutting it. You should have already cut DOT. I actually deleted it off my watch list because it broke down. So it really should have held in 7,750 on the breakout. That did not happen. Now we're looking at underside tests, aka pullback or an underside test in classical charting, where you have a support level that fails. That's a short setup. That's a short setup. That's a short setup, right? Retests of underside. That right there. This is a bad looking chart. I would play like 50 other charts before I would play this right now. All right. Folks, thank you so much. I really appreciate each and every one of you. These are quick updates. If you're feeling like you're wanting more, watch yesterday's update. I'll do another one tomorrow. These are very quick market updates. Again, I do the full market report twice a week, Bitcoin Live, no matter what. That's my priority. These are fun, but those are more important to me, just to be honest with you folks. But these are fun, and these are part of the quick market update series on my YouTube channel, Cheds Trade. And you really make sure you watch those TA tutorials, watch the market updates. I've published 3 books. They're mostly free in one form or another on my channels here. And folks, please hit like, please hit subscribe. I hope everyone's having a good Friday. Friday's is for having fun. Spend time with your family, spend time with your friends today. Live and love and enjoy yourself, because I know I'm enjoying myself too. So, folks, thank you so much for being here. And I will be back tomorrow. What time tomorrow? Yeah, probably around this time, maybe a little bit earlier. So, all right, folks, thank you so much. Big Cheds out. Hold on. Great question before I wrap up. Great question before I wrap up. Thank you. So, Mr. Keg, I love these questions. What's better, playing coins that are down a lot for potential upside, or playing strong coins? Playing stuff that is strong. If you want to go long in something, you want to find an uptrend that is strong and wait for it to dip. You want to empty out your bankroll. You want to zero yourself out. Play downtrends and guess every time they reverse. Try to guess, right? It's a super downtrend, a little bounce, it's the bottom. Probably not. Trends tend to continue. If you're going to play a downtrend, you have to wait for the two-level filter, the diagonal break and the lower high break. I've gone over this a million times, but it's a great question. It is much better to play strong charts. Find the strong charts and ride those trends. Don't convince yourself that a downtrend should be higher. The market knows where it should be. The market has already settled the price for you. Avoid bad charts. Throw them away. Ignore them. Find strong charts, wait for them to dip, and jump in at clearly defined price levels. All right? That was a great question, Mr. Keg. All right? All right, folks, thank you so much. Please hit sub, and I'll talk to you soon.